I just found with questions too long. I was hungry and I went out the real night. Ready to tell me about the about drinking on. You see, changes, changes, it's not the same. Because we were all so reading the signs and something reminds me of the places I've been. This was a good time for all, so much pleasure. Make me won't go back again. It's a somehow it just did the times and riches outside of it's unseen. I can't read. I these changes, changes, nothing things quite the same. So, it's a rain. That was what I found real wild. I wish I could jump on up on you. Stop and sit deeper the ocean. I wish you would say let up be. So, so I can look back to it's just too much to say. Changes if we were crazy. Thank you. Thank you very much. Got that song. Yeah. It gets hotter than the rooster goose. We lay on the Georgia asphalt. Got a little crazy, but we never got caught. Down to the river. Here to the Kansas, in the moonlight. Talking about yeah, I know. There's no chance. You never do have to think. You've never been to me, but man, I'm not living with I was with she was a little so it makes no come. Knock her off early, but I didn't lose it. Down to the came to the bedroom. I get there. Living for the man. Yeah, they're going to chat and give every you have to take money from your bed to me. Still, It gets hotter than Susie can. He laid rubber on the door of his home. Got a little pity, though it never got caught. I was with she running the big so and great stuff on. After all, really, but he didn't live it on. Down. Yeah. There's no chance that you never do hang with him, and he would order me to be Spain.
Well, good morning, everybody. Happy Friday. I'd like to welcome you all to our live trading room. Today is December 12th, 2025. Almost another year under our belt here. But before we dive into the charts and start our pre-market, we've got some very special lined up for you today. Today we're giving away three $25,000 evaluation accounts from Elite Trader Funding. This is a proprietary trading firm that allows traders to use their capital to get themselves started. Now, usually the expenses, getting started, it's pretty minimal. You just have to pass the evaluation account, and then you move right on into the funded simulated account, which is where you start getting paid. So if you're interested in that, we will be putting that out there throughout the day. We do have some quiz questions just throw out there to see who jumps in and grabs those evaluation accounts. Winners must be here on the live YouTube channel. And we also want to say thank you to Elite Trader Funding for providing these evaluation accounts so that traders can get started. Let's see, if you have one in the last 30 days, please give somebody else a chance. We'll pick winners with the correct answers in the chat. So I do have my team on standby, just ready to take action on that. So again, happy Friday. We are looking at contract rollover, which is happening today. And another thing that I wanted to just double check here is let's go out to the CME group. And one of the things that we'll check, okay, and this is something that each time we do a contract rollover, we should check this out. Now, there are some times when the contract or the volume shifts from the front month to the back month, it shifts earlier, okay? And then there's sometimes where the volume shifts from the front month to the back month later, okay? Now, this does have an impact on how the markets are traded, okay? And generally, the Thursday or 7 days prior to last trade date is when that volume starts to shift. But we can see right now, just with the S&P E-mini futures contract, that a large amount of the volume still rests in the December contract, okay? And as they're starting to move to the back month. Now, if we were greater than 50%, then I would start trading the March contract. But right now, I mean, you could trade either one, but right now there's probably going to be a lot more liquidity on the December contract. Now you need to check this because if it doesn't start rolling from the front month to the back month, usually you'll see it in the first part of Friday morning and the last part. But if the volume doesn't, the March contract doesn't exceed the December, then we can expect a lot of that volatility to happen on Monday. Okay. Now we are looking at the open interest has changed quite a bit. We got 133,000 contracts. Somebody sold 86,000 contracts, not one person, but many, and rolled to the back month. Okay, but we can still see that there's a big discrepancy in the front month to the back month. Okay. So these are things that just need to be aware of. There are occasions when the volume shifts from the front month to the back month earlier, and you kind of have that window between Thursday and Monday. And generally speaking, Monday, if you're not in a position to take delivery on many other future contracts, then and I'm just saying that, but this is a non-deliverable product, but pay attention to the volume shift. Okay, it can bring in some to the equation an understanding of the volatility. Okay, and having said that, as we look out to the price charts, okay, we can see the S&P is now -2, coming back up. Let's step out here. S&P and the NASDAQ are still inside days. And with an inside day, there's some characteristics about what we expect to happen, some rules that we adhere to. On inside days, often the market, the session open can be a little more choppier, okay? A little more volatile. And often the volatility can be illuminated, I guess, or be seen a little bit better when you take a look at the volume. Okay, so we got the Dow 30 volume, and you can see that the volume is still on the light side. Okay, the lighter the volume on the Dow 30 stocks, the more whipsaw or volatility we could expect in the overall price charts. Okay, see, with the lack of traders, price will drop or rally to where the big orders are sitting at. Okay. So we always want to monitor what's going on with the Dow 30 stocks as far as the volume and get a feel for that market volatility. Now, with the Dow 30 stocks, we can also watch how many Dow stocks are greater than 94 cents. We got 6 right now. Okay. 1 almost there. So 6 times 2 would be 12. So the cash market, which are the stocks, real property, cash market equals 12, and S&P futures are trading at negative 2.75. When we take a measurement of cash compared to where the futures are, we could say the futures are oversold by about, let's see, we got 7 to 14. So S&P futures are oversold by about 16 points relative to the cash market. Now, why is that important? Well, futures follow cash. Okay. Cash market moves up or down. Okay. And the futures adjust. Remember, futures are a derivative instrument. They follow the cash market. Now, certain rules around inside days. Inside days are often a little more choppy. Better trades are taken a little bit later in the session, like 10:30, 11 o'clock Eastern time, where you can find some good runs. Okay. We often see that the gap fills the same trading day on an inside day as we start off as an inside day. Okay. And we look for zone entries. Breakout trades often fail on inside days. Okay. So all of these observations a situation analysis, as you would say. Okay. These are things that we've been studying over the years. Okay. And they help us to gauge and understand the market volatility, the market reactions, and as things play out. The other thing to keep in mind is there's no economic reports today, and we've already had two Fed speakers come out. Okay, they haven't really impacted the market overwhelmingly. And we have a third Fed chairman coming out about 10:35. No economic reports other than the Baker Hughes, which is really kind of a non-event. And we also want to keep in mind that this is the time of the year that the Stock Traders Almanac comes out. And if you have not gotten your Stock Traders Almanac, you can put it on your Christmas list. The Stock Traders Almanac is probably one of the best tools you can have in your toolbox, especially if you are a new trader to the market. Okay. Stock Traders Almanac gives us a lot of statistics over the years, helps us understand what typically happens during this time of year, and they've gone back almost 100 years and documenting this information. Okay. So learn more about history and what the markets have done around the Christmas, New Year's time, all the holiday season, and what to expect. Okay. So a lot of focus. Traders will be a little confused in the morning looking at the which contract they'll trade. That typically happens, and we'll be ready for that. Okay, so the YM and the Russell both made all-time new highs yesterday. S&P and the NASDAQ currently starting off as an inside day. So let's take a quick look at that. Also, another note is that when we measure the Globex range relative to the daily ATR, okay, and we can see that the daily ATR is about 508 points on the Dow as I bring this up. Dow at all-time new high. Okay. We only have 157 points for the overnight Globex range. Now, generally, when you have a narrow or a small Globex range, you'll have a big run or a good trend sometime throughout the session. Okay. When you have a wide range, you're looking at the bull trap and the bear trap. And then when the Globex range is about 50% of the daily ATR, you can expect a little bit more choppier environment. The Dow has a narrow Globex range along with the Russell, okay, relative to the daily ATR. So when we look at that, we're saying, okay, well, the Dow and the Russell may have the bigger runs today because of that trading environment, okay? Whereas the NASDAQ and the S&P both on an inside day. Inside days often start off a little choppier. They look for zone entries rather than breakout trades. Breakout trades often fail. And very often the gap fills the same trading day, almost about in the upper 80%, upper 80, 85% of the time, the gap from the prior session's close gets filled on an inside day. Okay. So all of these are what some people refer to as situational analysis, and it's based on documentation of the characteristics of price action of the traders over long periods of time. So we get a feel for how to utilize that information. Often with an inside day, price has not broken the prior session's range by the time the market opens. And that leads to some of that choppier conditions, and waiting is a better option. Okay. When every one of the indexes is an outside day, gapping up or gapping down, okay, there's a lot more volatility in the market. Okay. So by watching and observing these things we produce in our pre-market routine, each day we can get a good feel of what the market conditions may be around the session open. Now, that doesn't mean that there's always going to be a trade. Okay. It just helps you understand what the weather's like. Okay. Should you bring a coat, an umbrella, or uh, shorts and a t-shirt? Okay. And that's all we're looking at here. So don't imply that just because I talked about inside day, outside day, that there's a trade happen. Okay. I mean, when you get up to the crosswalk, you're looking left and right. That doesn't help you cross the street, but it helps you gauge the risk in crossing the street. All right. Okay. Crude oil. Also looking at, we do have a nice higher low on a 60-minute chart. Now, on crude oil, price has broken out of that accumulation area. We had a long accumulation area on crude oil 60-minute chart. Price is also testing a support level right around that 57.38 that's been there on crude oil. The fact that we made a higher low and currently making a higher low as well would lead more to the possibility of price getting a bounce back up. Now, if prices were to rise on crude oil, we would look for the target above the accumulation area. Okay. See, all of these things that we monitor and document, they tie into each other, not necessarily to make a trade, but to help you understand the trading environment. Daily chart, markets have been grinding lower under the 50 and the 200 simple moving average. Okay, pushing lower, we got the demand zone right around that $54.60. Okay, but a shorter term, we might be looking for a tradable opportunity, looking for price to come back up to supply. Okay, we have a couple of fair value gaps areas where we look for that supply to take place. Okay. And of course, we have the area where we are looking for demand to come in, about 56.79, 56.57. Okay. Natural gas has had a pretty strong move to the downside, just reaching a little bit lower. Let's see, let's adjust that for exchange. Now, this is where the Stock Traders Almanac or the Commodity Traders Almanac would come into play and give you some additional evidence of what happens with natural gas during this time of year. Okay. Now, we did see a nice strong move up on the daily chart for natural gas, okay, as it moved higher. But this was as they were building inventories, okay, because of the colder months in the US. Okay. So as they were building inventories, the demand was pretty high, okay. As the inventories have gotten full, prices have pulled back, less buying going on, okay. So we're looking for where that demand may start to kick in. Now, knowing the different statistics that are out there may help you interpret and anticipate how you will execute on a trade during this time of year. 60-minute chart, price just hit the proximal line, 4.085. And that's where we've gotten a bounce at this point. Now, we can wait for a little more confirmation or a fair value gap to be created in order to engage in crude oil or natural gas. Gold had a great breakout on the nice little bull flag scenario in the overnight session, and gold is now pushing back up towards the all-time high. Okay. Expected that there will be some deliveries that are going to be taking place. A lot of talk about potential of failed deliveries. Okay. Now you notice we're not having a lot of trade opportunities just yet. Okay. And that's because the market's on an inside day. Often the trades come a little bit later. Okay. All right. As far as our exchange traded funds, we can see that the IWM will be gapping up about 19 cents at an all-time high. Diamonds gapping up about $1.02, all-time high. And we can see that the Qs and the SPY are still on a negative side. Okay, an inside day, things would be a little choppy. Okay, SPY is also approaching all-time highs. Okay, so we'll keep a close eye on that. Generally, when they start doing this, it's going to be a little tricky around contract rollover because they have to sell the front month and then buy the back month. So what the best scenario would be is that we see here near the open that price drops, and then we look for price to break the all-time high, moving back to the upside. Daily charts, we did see that pause on the daily chart around that 88.6% retracement back up, which usually makes that double top. But now we're looking at pushing above that. So as we watch the markets unfold this morning, we're going to anticipate that if price does drop, okay, or pull back, we're going to look for that opportunity to be a buyer and take this long, looking for the highs to be taken out. Okay. All right. Let's see. We did have some setups here on soybean meal. Right now, these markets are closed. They will open up in about 10 minutes, 12 minutes. Soybean meal is in a demand zone. Okay, and we just saw a bounce off of bean oil. So bean oil could look for some more buyers around $50.31. We do want to point out wheat. Okay, wheat is also in that range where we could look for a good profit margin potential of moving back up to 547. And often when the US dollar starts to move higher, they get a little more aggressive on buying some of these commodities. Okay. When the market's going down, or sorry, when the dollar's going down, they're getting better and better prices. Okay. But when the dollar starts to move up, since these are USD based commodities, um, there's a little more volatility in price. Markets, traders rush in to take advantage of that. Okay, the area that I have marked in red is that accumulation area. An accumulation area to me is more than 3 touches of resistance, 3 touches of support. This range in here tells us about all the filled orders. Okay, so when there's a lot of filled orders already in this range, okay, we expect price to go through that range with relatively no strong pullbacks. Okay, you're always going to manage your risk. But this accumulation area is where banks and institutions are putting together trades. Okay, the price drops out of that to the downside. That's actually looking for the bullish spring reversal. So you have an accumulation phase, then you have a breakout phase, and then you have a spring reversal. A good example of that is looking back here on, well, micro Bitcoin. Okay, so accumulation phase, breakout phase, and then we look for that spring reversal. This is information that you can get if you study what Richard Wyckoff put out, kind of mapping out the market. Also, Richard Wyckoff brings in a lot of volume around these areas. I have found that once you recognize where the accumulation is, it sets off a sequence of trades, both to the long side and the short side. Okay. Accumulation phase, breakout phase, then we're looking at the spring reversal. And there are fractals, so the best thing to observe is what's going on and do you have an accumulation phase? Because then you know which phase that you trade best and you know which phase is coming next. Okay. So on the higher time frame, we are now at the spring reversal for Bitcoin. Okay. And over the past few weeks here, we have created another accumulation. Okay. And notice a lot of these accumulations can also form resistance and support areas that are important because traders tend to watch these areas and their eyes are always going to where is resistance and support. The important part about this is whether price breaks to the downside or the upside out of the accumulation. The spring reversal is often the easiest markets to trade and the trending markets. And you also find that the Elliott wave phase is also in that general range. Okay. So on a larger scale, we're looking at a spring reversal as an uptrend getting established on micro Bitcoin. Okay. On more of an intermediate chart, we're kind of waiting to see is the breakout going up or is the breakout going to come back down and find that demand that was down below. Okay. Having a good map and the sequence of the different trades is very, very important. Okay. All right. So let's come back and take a quick look at what our indexes are doing. Sometimes you may be hearing me for the first time on YouTube and seeing what we do at a live trading. And there's sometimes when the market's not giving us good tradable setups. Okay. But what I just described in the first part of this, the first 10, 20 minutes here, is that there are conditions where we should be sitting on our hands. There are also statistics where we can back that up. Okay. Understanding the market environment is very, very important, and it often takes the longest time to acquire that information. And this is where experience comes from a vast amount of instructors and traders that are out there. The longer and more experience they have, the easier it is for them to navigate around. So I've always had the question, well, what can I do to accelerate that learning curve rather than taking several years to do that? Well, a pre-market routine by collecting specific pieces of information that can lead to the type of trading that works for your trading style. Okay. Inside days, outside days, volume on the Dow stocks, all of those things that we've described earlier help us assess the conditions. Now, I've already been doing my pre-market prep and such, getting ready for the session. So in days where you see me teaching or talking a lot, you can generally step back and say, oh, yeah, inside day. Okay, inside days were choppier, designed to take my money, better trades taken later. Okay. But you as a trader need to verify that information because not all trading styles are your trading style. Okay. As I refer back to the map, there are some traders out there that this is the best trading environment for them. And there are some that just say, oh, I don't like this. I want a trending market. Okay. And that's okay. Everybody's a little different. Okay. But understanding the different market phases, as we just talked about here, will help you understand a lot about your trading style and when you should be more active over other times. Okay. Treat it as a map, but each phase of accumulation, breakout, Elliott wave, ABC correction of the Elliott wave, the buying point, and then the markup phase. Okay, all of these provide or expose risk parameters based off of your trading style. So how will you use the map? Okay. Well, explore these, find them, see the patterns. Okay. The big banks and institutions are always in control of our markets. Okay. We just need to know when they're accumulating or distribution, and then where to break our trading opportunities on the breakout phase or spring reversal. Okay. And you also find that once you see the map, you'll be able to back away from the market and say, you know what, that ABC correction phase often gets me. Okay. Because my expectations after a big trend is the trend is going to continue, right? Or reverse. So you may get chopped up a little bit more in that ABC correction area. Okay. I know in my personal trading, that's where I get chopped up. Okay. It's adjusting the time frames for the right conditions. Breakout phases, usually you can stay out on you can expect bigger profit potential. Spring reversal, bigger profit potential on trending markets. ABC correction, smaller profit potential, shorter term trades, so on and so forth. Understanding your trading environment is very essential. Okay. Let's see. We have a lot of Feds speaking today. Looks like markets have been positioning. We also see right now that the market open order imbalance. Okay, just bringing that up. Financial Juice, another great resource. Actually, in the Elite Trader Funding Discord room, some traders mentioned that. So if you want to check it out, it's a pretty cool site. It's almost like having a Bloomberg terminal right in your hand. But the market open order imbalance, okay? These are orders to buy or sell at the open. And right now we can see the market open order imbalance on the Mag 7 has more sell orders than buy orders. And you can see that things are being adjusted as we get closer to that opening bell. Okay. Now there's also a market on close orders, which have some different parameters than the market open orders. Okay. Market open orders can be opened and closed at any time. Okay. And they change quite a bit. Okay. Market on close orders are locked in the last 10 minutes of the trading session. Okay. So there are some variations, some things you need to understand about the market open order imbalance. Because if we have more buyers, are buyers going to happen? Are they buying now? No, they're looking to buy at the open. They're looking for maybe price to drop into demand for that. Okay. So great information, a good site on that. And also you get news a little faster than the average Joe. Okay. All right. So we are seeing S&P pulling back a little bit. So no breakout trades on inside days. And they're off. Okay. S&P futures down 11 points. We have, looks like 2 Dow stocks negative now. And we have 9 positive, 7 times 214. So S&P futures are oversold, but they're not in a place where we should engage yet. Okay. Inside days may take a little longer for us to find a good place to engage. We're looking for a demand zone. The accumulation area that we have on this time frame right here. Okay. The good demand is going to be below that range. Okay. So we have a couple little areas in between, nothing really that stands out. So we could be looking at, as they get out of the front month contract of December, okay, the prices may drop as we do that contract rollover. Okay. This is why we pointed out the volume on the front month versus the back month. Still needs a lot to happen. Okay. So in a perfect world, a price dropping down to find demand, and then we would look for that potential rally to come back up. Okay. So not understanding the market conditions around this, you start to understand where your tradable opportunities are, especially using that area, which is what we call an accumulation area, and looking for profit targets on the other side of these. Okay. So again, as we start off as an inside day, little volatility. Let's drop down to a 5-minute chart. Looks like price is just testing support. I don't have a place to take a trade short yet, but looking for a place to go long. We have a leg base zone, and I'd be targeting right in this range here. I have my first level, 68.82 as a fair value gap. Okay. And we also have a leg base zone, a rally formation where and the zones are really meant for understanding the risk on a trade. If I choose to enter at 68.82, then my stop loss at 68.77. Okay. So zones are there to gauge risk and help you size your position based on your trading plan. Okay. All right. So opportunity to go long. I'm going to set a trade up here on the S&P, looking for 68.82. I'm going to start off with just a couple of micros. On inside days, must have a zone entry, 68.82. Okay, zone entries only. Stop loss, 68.77. Make sure whatever risk you are taking on a trade fits within your trading plan. Okay, not somebody else's trading plan, your trading plan. And if you have a max risk of $200 or $300 a day, then stick within that. Okay. All right, looking at the NASDAQ. NASDAQ hit a fair value gap on a 20-minute chart, drop down. Let's see what we have on the 5-minute chart. Just came down to the leg base. Tap the upside of that zone. Now, when you're using the leg base group of candles, you see that historically price often comes back down to these areas. But looking at the leg candles leaving the zone, okay, if the leg candles leaving are bigger than the leg candle in the zone, okay, then we look for price to use the zone twice. So we had to hit once, and often the second test goes a little deeper into that range, okay? So I'm waiting and I expect an entry. Let's see if there is on this. My charts are slowing up just a little bit. Let me stop the video so we can get a little more resources here. Okay, so looking for an opportunity to go long on the NQ 25,517. I'm going to keep it around 3 micros. I'm going to come in at 18. Stop loss would be around 502. All right. So we're looking for price to come a little deeper into that zone. We do have some supply up above. But if price starts going above that 654, you're going to look for an opportunity up above that accumulation area. Okay. So as we start mapping out the potential trades, we're going to look for an opportunity to go long with managed risk, opportunity to go short, managed risk, no trades taken inside the dead space. Okay. Let's bring up the Dow. Dow also holding a high type base. Okay. It's an outside day. Dow and the Russell are going to be a little more tricky to trade. Because of the narrower the more narrow range. Now, all this is doing is building support range right in here. Now notice how choppy the price action is right in that. So let's increase the time frame. See if we can smooth it out, get a better picture. And it looks like we do have a fair value gap on an 8-minute chart right around in this range here. Okay, we'll continue to monitor it. No reason to tie up capital just yet. No reason to take a breakout trade yet either. For breakout traders, Dow breaking below 48,771. Okay. All right, let's take a moment here and let's ask our first question for a $25,000 giveaway from Elite Trader Funding. Okay, an evaluation account. Everybody ready in our YouTube channel to get one of those accounts? We have mentioned one technique today, which is using the ATR. Okay, and we took the ATR of a daily chart and we sized it up against the Globex range. Okay. So the question here, and it's multiple choice, what does ATR stand for in trading? Average trend direction, A, B, average true range, or C, actual trade rate? Type your answer in the chat and the team will reach out to you for that Elite Trader Funding account. They'll get you set up. Okay. And I always want to give a shout out to Elite Trader Funding and go out. They do have some excellent Christmas specials. If you're already part of the Elite Trader Funding family, go out and check their specials. Okay. They often have some really great deals. Okay. So what does ATR stand for? A, average trend direction. B, average true range. C, actual trade rate. Okay. Type your answer in and the team will take care of you. All right. Great to have everybody here today. Good morning, Silk Stocking. I like that. I like that avatar name. Okay. Let's see. We were on the Russell, so we're just getting set up on Russell. Russell has broke that little support. We are looking for okay, got that. We're looking for zone entry. So on Russell, looking for a trade opportunity for long. This is a fair value gap in the direction of the trend, and often these fair value gap areas can be very good places to expect some unfilled orders there. Okay. 2581, 2578. So we're going to place an order out there just in case we get a quick little drop. 2581 area, looking for that long. I don't have a place to go short. I don't want to try to get in short and get whipsawed around without having a good entry. Yeah, even on the 5-minute chart, we can see we broke that support. And we're still looking for the long. $25.81. Remember, do not take more risk than what you've allocated for your trade plan. Okay. 25.78. Now the Russell pays out $2 per, let's see, pays out $5 per point move. Okay. On the micros. So if we're in at 25.80 and we have a stop loss at about 25.78. You got about $10 risk per contract. Okay. Let me get this set up here. Stop loss 78. Back to the Dow. I know it's tempting to take a breakout trade, but it's not the right conditions or economic reports for a breakout trade. It can be a little more risk. All right, we're still looking for that zone entry on the NQ. We have a trade set up, 25,517. Stop loss at 502. NASDAQ pays out $2 per point on a micro. So you have about 15 points risk per micro contract. Okay. And generally speaking, my risk parameter is about $300 per trade. And I'll start off risking about 50% of that if I anticipate that this is in a market phase where I'm looking for a trend. And of course, when you start watching it, it slows down. I'll come back to the NQ, S&P. S&P also has an area. We already have an order set up on that. And looks like we might even be able to get the breakout. I'm not going to participate in the breakout because it's just not a good trade setup. Going to look for 68.82. See if we catch a bounce off of that. All right, what are we on? Crude oil has just gone sideways. Another observation on crude oil, you can see crude oil has a $1.37 daily ATR. Okay, right there, $1.37 average true range on a daily chart. The Globex range was 84 cents, $1.37. So when the Globex range is between about 40 and 70% of the daily ATR, often things are choppy. Now, once I have 3 touches of resistance and 3 touches of support, this is letting me know that this is an accumulation phase. Okay. Markets, big players are accumulating. They're going back and forth, buyers and sellers being matched up. We're going to look for a break down or a break up for the breakout phase. Okay. So accumulation phase leads to a breakout phase. Breakout phase leads to that spring reversal. Okay. And so on and so forth. Use it as a map. Okay. So we're right now still in that accumulation. We also noticed that the Globex range compared to the daily ATR was about between 40 and 70%. So that also alerts us that things could be a little more choppy. How we do it on the NQ? Are we there yet? Almost. Another observation is price arriving to a demand zone or supply zone. What time is it often better that it does that? Very often price arriving, not early, but on the quarter hour. Okay. Arriving into a demand zone or into a supply zone. If it arrives early, often you'll get a small bounce and then it'll continue to go through it. Now, again, these are situational analysis. These are things that we observe over time, and we've seen that we can rely on them. Of course, managing our risk. Okay.
Order filled.
All right, we just got her in there. Our stop loss is in place. Let's double check with our stop loss, our max risk. I'm taking 3 micros. I've got a $94 risk on the trade. And what we're looking to see is if there's enough buyers to support this. If not, I will get stopped out. I will lose $94. Okay. And if at any time you can take a profit, okay? Remember, what phase are we in? Are we in a short-term trade or are we in a longer term? Okay. What market phase are we at? I'm going to grab this. This was a small
Order
hit.
filled.
Then we'll look for a lower level. Yeah, I think they're going to target that 50 moving average. Okay. The point being that, some of those zones are going to be for short-term little grabs. Okay. Scalping. Why scalping? Well, when you look at a little bit larger picture on this, notice where, if you go back and do your homework, you can see where we're at in all of this, where price is currently relative to the dead space over to the left. Okay. So a short-term trade opportunity was part of what I needed to do, not stay too long. Okay. That was a hard one for me to learn because I always wanted to stay longer and get the trend, but I didn't realize what phase we were in, and I was staying too long in the wrong phase. Okay. But you judge yourself for your trading plan, what's going to work for you. Okay. All right, we got S&P also approaching there. Now, which phase are we in? Well, we got the breakout of a potential sell territory. We got our support. We got sellers up above. And we have a speed bump down below. Now, these speed bump areas, often price will give that head fake breakout trade and then rip back against traders. Okay. Kind of like that fake left and go right. All right. All right, let's take a look at, we got the S&P up here. S&P is down 15 points. We have 1, 2, 3 down stocks negative, and we have 13 that are positive. So net results is 10 positive. Take the 10 times 2, cash equals positive 20. Okay. Futures follow cash. Cash equal positive 20, but futures are trading negative 15. S&P futures are oversold by about 30 points, 35 points relative to the cash market. Okay. Recognizing that futures are oversold relative to cash. Okay. We're also anticipating that 10 a.m. reversal. Okay, which happens about 85% of the time. So a perfect world scenario would be the price arrives in our demand zone in the next 8 minutes. And then we look for that 10 a.m. reversal and price to continue on back up. Visualize what you would like to see on the price chart. Have good qualifications of what you're looking for as far as that potential turn. We have the leg base, leg base. On a different scale, this could look like a rally base rally type pattern. Okay. We also understand it's contract rollover. So with contract rollover, we may see that there's a little more selling pressure at the beginning of the session, a little more buying pressure towards the end. Okay. Stocks versus futures. Okay. Cash market versus derivative, if you want to say it that way. Okay. Futures are oversold relative to cash. And the way that we come up with that is we take the number of Dow 30 stocks. Why only the Dow 30? Well, the S&P, NASDAQ, and Russell are market capitalization weighted indexes. So the larger the market cap stock is, the more it influences the index. The Dow is a price weighted index. Everything has equal weight. Okay, so we can use the Dow 30 as an odds enhancer. Take the number of Dow stocks that are greater than 94 cents negative, greater than 94 cents positive, and net the results. 3 negative, and looks like we now have 12 positive. So that leaves us net results of 9 positive. Take that, multiply it by 2. 9 times 2 is 18. Cash equals positive 18. S&P futures are trading at negative 13. S&P's futures are oversold relative to cash. Okay, a lot of information there, and once you do it a few times, you'll get comfortable with it. When we're looking to go long in the market, we want futures oversold relative to cash. When we're looking to go short, we want futures overbought relative to cash. Futures always balance out, Cat. Futures are the right to buy something in the future. They're not futuristic. Okay. So in a perfect world, we'll look for price to come back down 62 or 68.82. We got about 5 more minutes on that for that opportunity to get down there to where the buyers are. And what I mean by about 5 minutes is we got that 10 o'clock reversal coming up. Okay. Now I don't have a short entry, okay, based on my trading plan. I look for a very specific picture to take the short down or the long to the upside. So I'm not participating in the short. I'm looking for the opportunity for price to match up with the long. Okay. So how you guys doing out there? Is everything, you guys getting a good grip on this? You know what we're waiting for? You know, the price levels we're waiting for. And we do take questions. Okay. So you don't have to hold your questions. I have a really great team that watches over the questions and in our chat and also in the YouTube channel. So ask away if you have them. All right, let's double check on the NQ. Well, NQ got a little bigger bounce than I anticipated. Okay. Something else is notable is relationship where price is currently and the daily 50 moving average. Okay, right now up in the upper corner here, I have the daily, and on the daily chart, we have the 50, which is the blue, and a 20 simple moving average. Okay, the 200 is way down below. Now, very often when the price gets close to that 50 simple moving average, okay, we look for changes in the overall market conditions. Price trading above the 50 moving average, market participants are often a little more bullish. Price trading below, a little more bearish. There's no economic reports. We do have a Fed chairman coming out about 10:30 Eastern, and we're still just looking for the buyers to come into play. Crude oil, still chopping. Looking for the next phase, which would be the breakout phase. Natural gas, quiet. Okay, same thing on natural gas. You notice the Globex range is about 13 cents. The daily ATR about 27, 28 cents. When the Globex range compared to the daily ATR is about within that 40 to 70% range. Okay, often things are a lot more slow and choppy at the open. So Globex range being narrow, we look for a bigger trend. Okay, Globex range wide, greater than 70%, we're looking at the bear trap and the bull trap. Okay, so it's always good to understand those market conditions so you're not trying to trade when the market's going to be choppy. Only by observation, actually, you're getting a clue right now when to observe this. Between 40, let's see, 0 and 40% is a narrow range. 40 to 70% is the mid-range, choppy, and 70% and above, again, Globex range compared to daily ATR, is where we look for the bull trap and the bear trap. All right, come on, price, come on down. And I also use Apple and NVIDIA as an odds enhancer. S&P is a large market cap weighted index. The two largest market cap weighted stocks would be Apple and NVIDIA, or Microsoft and NVIDIA out there. So by understanding whether Apple and NVIDIA or Microsoft and NVIDIA you choose, okay, what their price action is doing will help you get an idea of how the futures will adjust. Futures are derivative instruments. They follow the cash market. And the large market cap weighted stocks have some of the biggest impacts here. Okay. We already have an order out there. We're just about ready to be triggered. Come on, a little bit more, a little bit more. Can't believe it. How much did it miss us by a tick? No, it missed us by a couple of ticks. I'm not ready to chase it just yet. Give it up to about 3 minutes after. Kind of being stubborn and putting these things together here. There we go. You can see in the video it's still pulling back. Apple's got a slight bounce. Notice that Apple's up and the video's down. That's why it's taking a little bit longer to process that. All right, while we're waiting for that, let's bring up our next question here. Question number 2 for a $25,000 account, compliments of Elite Trader funding. Okay, this is an evaluation account. Okay. What phase follows accumulation? What phase follows accumulation? A, consolidation, B, breakout, C, reversal. What phase follows an accumulation phase? Type your answer on the YouTube channel and our team will reach out to you to get you set up with that Elite Trader funding evaluation account. Oh, 2 ticks, come on. Now, the reason I'm waiting for the entry, there we go, is I still see in the video was dropping just a little bit, come down to touch that support again. Okay, so I gave it just a little bit more time for for that. So I don't want you to think that, oh, I'm just being stubborn for a couple of ticks, just get in. Okay, no, I had a reason I was waiting. And when you watch Apple and the video together, if they're both going the same direction, you'll find an easier trading environment. Okay. When one is up and one is down, things are going to be a little choppy and take a little bit more time for things to play out. Okay. So we took 3 micros on that trade. We have $75 risk on the trade. Okay. And now we're looking for a goal. Come back up and fill this gap. Remember, information we collected on the higher time frame, okay, is that we're still an inside day. We had to wait for a zone entry or a fair value gap entry. Okay, we didn't take a breakout trade. Very often on inside days, gaps fill the same trading day. Okay, so another little nugget of information there, gaps fill. So if price is going to fill that gap and I can only use a zone entry, manage my risk, okay, I'm looking for price to get back up to that gap fill area sometime today. I got to find a way to get into the trade. Okay. And for an inside day, we use zone entries only. And another part of this is if price goes a little too deep and goes into the dead space or that accumulation area, then we're looking for price to go to the other side of it. So big institutional traders are trying to keep that price above that that dead space area. Dead space is just another way that we describe that accumulation area where we see that a lot of orders have already been filled. And when you have all those filled orders in that range, okay, price can easily move through it. That's why we had to manage our risk the way we did. Okay, because going a little bit lower, price could sweep to the other side. Okay. See if they defend this yet. And we still haven't made a fair value gap to the downside yet.
Order.
We've got our leg base. Okay, I managed to trade off the fair value gap. I'm going to be willing to take another shot at this. We got that 874. And actually, we're right at the proximal line there. About 874. Coming in, almost got us. Now remember, S&P futures are down 32 right now.
Order filled.
1, 2, 3, 4, 5, 6 Dow stocks negative and 12 positive. So we got 6 positive net results times 2 is 12. S&P futures are oversold by about 42 points relative to cash. NVIDIA can keep sliding just a little bit. Get a panic. NVIDIA is still giving a lot of pressure on this market. No, inside days are a little more challenging, and we're looking for that gap fill. Come on, make us look good. Make us look good. All right, so first target on the 5-minute chart, it's going to be right back up into this range here where we have the fair value gap. All right, so nobody still hasn't answered question number 2. Let's come back to that. What phase follows the accumulation phase? Somebody step in and grab that evaluation. What phase follows an accumulation phase? Okay. Then we have one more giveaway after that. Now, what you're watching here is that the picture we used over on the left-hand side of the chart helped us anticipate there were some unfilled orders left at this range here. Okay. What to be determined, is there enough unfilled orders to turn this market back up? Okay. So the picture over on the left-hand side, we have a leg base group of candles, leg in, base, leg out, base. Okay. That group of candles tends to be present when price has some demand or some supply in that range. Okay. Now also notice that in that same area, we started to see that, or when price arrived in that same area, we see that Nvidia and Apple also started to bounce out of that. And we're starting to see some change in the stocks. Okay. So there are some buyers here. What remains to be seen, and that's why we manage risk on every trade, size your position properly, is that we utilize things that are outside the price chart as well as things that are on the price chart. Okay. All right. Mhm. Yeah, it's like right now you're going, well, should I stay or should I go? Okay, well, look outside the price chart. Our future's oversold relative to the cash market. Is Nvidia starting to get a bounce and Apple starting to get a bounce? Okay. So if Nvidia and Apple start going the same direction or start moving up together, then we're going to see a little more follow through with the S&P. Okay. Remember, futures follow, they don't lead. So by looking at the largest market cap weighted stocks, if they're going up, then the futures will adjust and go up. And you can also watch um, the exchange traded funds for more information. To help with that, we're going to look out at the tick. Let's see what we have some going on with our internals. Well, the trend is low. Okay, so there's more down ticks and down volume right now than upticks and up volume. We see the VIX is at extreme complacency, so that's kind of bullish. But we are seeing on the tick Q that we're approaching more downticks than upticks. Okay, still in that mid range. We're not at a buy program. We're not at a sell program yet. Okay, and we've noticed over the last week that the tick and the tick Q, which are based on the composites, they've been off a little bit. Okay, so the Nasdaq's struggling a little bit more than what the S&P is at the moment. Also with the advancing issues over declining issues. Right now we're in the no trade zone. We got equal number of advancing and declining issues. Okay. So it's kind of making you confused. Okay. Makes me confused. We're waiting for some of those extremes so we can get and participate in some good momentum type trades. But right now, the momentum is not kicking in, and it is more on the bearish side at the moment for this. So here's what you can do. You can say, you know what? I was willing to risk that money on that trade. I am now not willing to do it. And you can take a smaller loss. Okay. If you're not in, you can wait for a little more confirmation, price turning back to the upside. Okay. We just got hit on the Russell. Okay. Russell just came down, hit demand. Stop losses in place, 25.78. We got $46 off of 3 micros risk on this trade. And notice how sloppy that was coming down. That's a beautiful entry off of a fair value gap entry. Risk is managed. Ooh, that was a good short-term trade. Now, notice that the NQ is approaching the 50-day moving average. Okay. Closer price gets to that 50-day moving average, you want to be a little more defensive. Closing below, we'll see some more selling come into play. Bouncing off of that level can be some pretty good momentum. So we're looking at 25,324 for the daily. $324. What do we have way over here? Starting to get some more upticks now, but we did go all the way down to the extreme. Watch your time. Russell's still staying. Oh, Russell's getting a beautiful bounce. Yeah, we're looking for a potential profit target. You can take profits anytime along the way, but I'm looking for that 2,600 area for profit potential. As on a 5-minute chart, if we have another fair value gap that sets up, I may have an opportunity to add on to that position. All right, if you didn't like the heat you were taking on the S&P, it made you feel uncomfortable. Okay, you're getting back to a point where you could get out with a very small loss. Okay, only you can judge your feelings on that. Whether you feel that, well, when I was down $100, I didn't like that at all. Okay, well, then step aside. Okay, study what's going on here. Okay, nothing has been violated as far as our stop and our trade plan. And you have to have that hard conversation with yourself. Many times traders are approaching a trade, they're fully prepared to take the risk on the trade as long as they're not in it. But once they get in it and they see the red, oof, that changes the whole playing field. Okay. Hi, Dingy. Yeah, Dingy is also pointing out that the NQ is a little bit more on the bearish side. Okay. And I agree with that. That's why we're pointing out that 50-day moving average NQ opportunity now around that 25,353 area to find some buyers. And overall, the markets are getting a little bit sketchy here. Yeah, things are looking bearish. Okay, S&P, no fair value gap. Okay, we do have another Fed chairman coming out and speaking in a few minutes. Before we wrap up our session here at the bottom of the hour, we do have one more question and one more giveaway for a $25,000 evaluation account. Compliments of Elite Trader Funding. You can go out to elitetraderfunding.com and you can also see that they have some additional uh, Christmas issues going on or Christmas sales. Um, but keep in mind, their sale is not going to be a free giveaway. So, our last question, our final question for the $25,000 Elite Trader Funding account giveaway. Which session usually brings the highest volatility? A, the Asian session, B, London, or C, the New York session? Which session brings the highest volatility? Type your answer in the YouTube channel and in the chat, and our team will reach out to you and get your information so we can pass you that evaluation account. Back to Russell. Russell's still positive. We still have risk on the trade up to about $46, $47 on that. S&P taking a little heat on that one. Nothing has been violated yet. And S&P futures are still oversold relative to cash. Oh, good job, Roger. Yeah, this will be a good one for you. Good to see you, Roger. Yeah, grab one of those evaluation accounts and start getting paid on those. Okay, so Russell, market's getting a little more weak, but I still think we're going to push up. We anticipated the pullback this morning based on the contract rollover and so on. Okay. Yeah, let's take a look at our other products out here. Nice little trade on the soybean meal. I didn't participate in that one. I know a lot of folks like to participate more in the equity indexes. So nice trade on the soybean meal. Corn is in that accumulation area. And nat gas is right in demand. And we also have the euro went up and touched supply. Yeah, things are getting a little ugly right now. I'm just waiting for demand to come into play. A little bump on Russell. How's our NQ doing? Ooh, we're getting real close. Let's get that set up. Now remember, we fully expect the NASDAQ and the S&P to come back up and fill the gap. This often happens on inside days. We just broke outside that range. And look where the 50-day moving average is at. It's all coming together here. Now, when you see price churn out of one of our zones, one of the first things that you want to look for is what was over on the left-hand side of the chart that you could have used in order to anticipate that entry. Okay, what does it look like over here? Doesn't mean everything's going to be a profitable trade. It's just when you start looking at charts, okay, and just grabbing a random chart, what you want to do is say, why did price stop right here? And then you go over to the left. You'll start to see that there are some very common characteristics, especially around stocks and futures, is that something over on the left-hand side of the chart is there. We use that leg base group of candles. We use uh, fair value gaps and a lot of information over there to anticipate that there's some leftover buy orders there.
Order filled.
Nasdaq's going down hard. And my screen froze up.
Order filled.
Come on, screen. Little capitulation right at the bottom of the hour. Sorry, I didn't have my stop in place here. The screen was freezing up. Give this a second to bounce. We're already at the extreme level as far as down ticks. Yep. Right in the middle of that range. All right, I'm just giving this a little bit of wiggle room. We're right on that 50-day moving average. That's where I'm trying to justify holding that just a little bit longer, anticipating that they're going to defend that 50-day moving average, and we should get a pretty significant bounce from there. Right at the bottom of the hour.
Order filled.
Okay, and we'll go from there. All right, you guys have a wonderful rest of the week. I will see you guys on Monday. Hate to leave with some red on the screen, but it is what it is. We got to wrap it up. A little bit later, we do have Mastering the Charts recap and review session. And yeah, just keep in mind, inside day started out on the NQ, and we're looking for that potential gap fill on the way back up. Okay. Everybody have a good weekend. I'll see you Monday. I keep stalling here. I'm hoping to get some green on the screen here. Okay. Come on, show us some green. Coming up out of there pretty good. We're taking the heat, took the heat. And see if we didn't have some of this information outside the price chart. Now look at the number of upticks over here, the cumulative tick. there's some buying coming in. Okay. Things outside the price chart help us navigate as well as the things on the price chart. Okay. All right. I'm just hoping it was going to go green before we had a step away. Come on, go green. Getting close, getting close. There we go. I know we had to sweat it out a little bit. All right, again, I'll leave on that one. Have a great day, everybody.